Welcome to Our Stock Trades. In this video, we're going to calculate the intrinsic value of the Zoom stock. Now, recently, within the past 24 hours, Cathie Wood specifically stated, let me show you the article here, that it expects Zoom to be around $1,500 per share in 2026. So what we're going to be doing is we're going to use our intrinsic value calculation, use a couple of modeling formats from our software, and look at the specific earnings per share, book value, and calculate the value of the Zoom stock. But by first, we need to go ahead and give an introduction based off of the financial information. If you look at the statement of cash flows, you can see right now Zoom is sitting at around $1.5 to $1.6 billion. If you go in and take a look at the assets here, we can see that they're sitting around $7.5 billion compared to a total liabilities of $1.7, meaning that liabilities is how much debt they owe, right? And assets is basically how much liquid or illiquid they have. And you can see that they have more assets than they have liabilities. In fact, their cash equivalence is about just as good as their liabilities, which is what you want to see. Okay, now we're going to go in and we're going to shrink myself. No, we don't have to. Look at the revenue. As you can see, revenue is increasing into the correct direction. It is going in a positive upslope manner. Gross margins percentage is increasing correctly. We did slump off in 2021, but we are going back and stabilizing to what we saw during the levels from 2017 to 2020. This means that they're able to keep more of the dollar that gets to come in through revenue. If we look at the operating margins, again, increasing into the correct direction. Now, if you look at earnings per share, EPS, that is going in a positive slope, as well as the book value per share, which we can anticipate because they don't offer a dividend. So they usually go in sync because they're not pulling money out of the business, but reinvesting it back in. And again, if you need help analyzing this, we do offer a mastering stock market course in the link down below that is expiring. All right. Let's get started here. So the free cash flow is going into the correct direction, and this is exactly what we want to see. Now, some people, they want to go in and they're a little bit more visual. So by doing this, we can go in and look at the earnings per share and book value, and you can see that it's increasing literally in the same direction. The return on equity is amazing because we want a company that's over 8%, and Zoom is providing that. So the return on equity is fabulous. The current ratio is in the correct direction. We like to have a company over 1.5. We can tell that this company really likes to focus on its balance sheet and making sure it's very strong. And we can go ahead and know that they're going to not go in bankruptcy within the next year or two. If you look at the debt to equity ratio, we like to look at companies under 0.5. We can see that this is not even near that, and we can see that slowly increasing, which is what you want to see during times of economic tightening from the Federal Reserve. All right, so now what I want to do is I want to go back here and take a look at Zoom's revenue growth. So I personally don't see what Cathie Woods is seeing based off of the projections. Now, if you look at the long-term revenue growth from the past couple of years, then yes, Zoom has been growing extraordinary. However, if you look at the revenue year over year now, you can see that there's some level, it's starting to level out, and we're only getting revenue growth at around 12.29%, meaning revenue growth is slowing down. So I am not too sure I agree with her analysis stating that ARC's open source research model, could approach 1,500 compounding at a 76% annual growth rate in 2026. I just personally don't see the 76% annual growth rate when you look at the year over year when it's only 12%. 12% is quite different than 76%. So I just don't see that, and I want to see that. I really like Cathie Woods, but I just don't see it here, and I'm trying to understand where is she getting this from. From right now, it's just not there. And if you look at the analyst estimates for 2024, they're thinking it's going to be growing at around 13.4%, which is right where I think it is going to grow. So if you go and take a look at our intrinsic value calculation, we're going to go in and, as I said, we're going to exclude the free cash flow values for 2017 and 2020 based on the fact that it is quite low, and we know the revenue growth is going to be quite handsomely increasing. So by doing that, we're just going to take the free cash flow from these specific years that we have. So by doing that, we get a bear of $76, and base of $99, and a bull of $138 with a 25% upside. And we're currently trading at $110.40. So let's take a step back, and I want us to go in and focus and see if Cathie Woods is correct and this company is able to grow 76%, what would be the price based off of my models? So let's go ahead and do it. So we're going to put 76%. We're just going to drop that number in there, and we're going to assume that Cathie Woods is correct. So we're going to type in it doesn't matter what year you place it in, it just takes the average, the free cash flow for those years I talked to you guys about, and we're going to divide it by the number of outstanding shares for Zoom based off of what Morningstar told me. And by doing that, you see these enormous prices in stock. But wait, there's more. If you go back down here, you can see that this research extends our 2021 analysis. Now, they believe at the end of 2026, these are going to be the price targets, where the bull is 2,000, the bear is 700, and the expected value, the base, is 1,500. So by the end of 2026, it'll be 2027. So what you can do is you could take 27 minus 21, which is 6 years. Then you would put in 6 years here, and then we cuts down our intrinsic value calculation to these price projections. And if you want to increase the perpetuity model to 3%, which you can, I won't, you get a stock price of anywhere from $639 as the bear, which is right in line with her bear value of 700, right next close door right there. But the base is $853, and my bull is $1,212. However, I gotta caution you guys. This is 76% growth. You gotta tell me here, where do you see 76% growth? I love what I see here, but what's going on in this direction? You're starting to see it level off. Now, if they can somehow miraculously go in and start pulling customers, maybe more customers wants to go hybrid, but looking at Elon Musk, pushing everyone to go inside, working regardless, if you're an office worker and you can do it remotely, you want to go in and bring workers in, other companies might follow pursuit. I just don't see 76% growth. But if we do see that, then we will attain to those price targets. But based off of this calculation, personally, for me, I think my values for this stock is anywhere between 76 to 138, which the market is effectively pricing. All right, so now we're going to go in and take a look at our software, and we're just going to look at some technical analysis. So I'm just going to pull this up here really quickly. We're going to look at the minute, then we're going to look at the hour, and we're going to then look at the day. And again, this is pulling up in live, right? And you can have access to this in our AL's subscription called AL Stock Alerts, which gives you full access to this for as low as $10 a month. So this basically is our artificial intelligence technology, which basically pre-graphs support and resistance lines. We can see that we broke a level of support here. The next level of support is around $102. Now the CPI data is coming out tomorrow. And now if it does turn out to be bad, then we could possibly test a specific level of support or these particular sets here, which we'll go over in the larger time frame. But as you can see, these are the levels of other support systems that we have. And let's continue on to the hour chart. So as you can see, we got stopped near around $119. We do have a hardcore resistance here. We do have a strong level of support at $107. We can see it bouncing off of here with a level of support at around $91.80. If you look at the day chart, we can see 117 has been a difficult one to break through. And it's anywhere between 90 to 117 is the oscillation that we've been experiencing for the past couple of weeks. Now, in terms of our weekly, we do see that we are testing this boundary. If the CPI data does come back, we can expect a handsome bounce, as we know what the Federal Reserve is going to be doing in their June, July, and September meeting and beyond. So we could possibly end up seeing 143. Again, for my intrinsic value calculations, I just don't quite see it. Now, again, if you look at our DCF, which is our brain machine proprietary technology, again, it's saying 113. Now, again, there's other things we have. We'll be injecting other intrinsic value calculations very soon within the next couple of weeks to give us more capability within our software. And again, these are all the other things we can look at, but as of right now, I don't really see the need, because if you look at the calculations, it just doesn't seem appealing to me. And I honestly don't see 76% growth rate unless this company pulls a Houdini or we get into another pandemic. So let's go in and just take a look at the economic calendar. If you go in really quickly, you can see here that this Friday is the May CPI. Now, I was listening to a lot of economists, and they were saying that they're not too much worried about May CPI, but more so June, because the price of oil hasn't been increasing. So perhaps CPI is going to be worse in July's report when we figure out what happened during this month in June. Now, the unemployment claims really slumped down. We unfortunately did not. The last time we had these types of measurements was back in January, which is another reason why the stock market felt a little ill today, and also in anticipation with CPI. So it's going to be very interesting to see how this comes into fruition within the markets, but I'm very excited to see how things work. And you can take a screenshot of this economic calendar to help you with your markets. Now, if you enjoyed this content, please consider liking, subscribing, and hitting that notification bell. It means so much to me. And please comment down below what you think of this analysis. That is all I have for you today, folks. I will see you on the next one.